my best to summarize his prolific profile.
Keep it short, yeah.
It's very, very short. And if I go through all your achievements, it will be more than a day. But Nandan Nilekani, an Indian entrepreneur, Padam Bhushan awardee, and the co-founder and chairman of Infosys, has had an inspiring journey. He played a pivotal role in Aadhaar as its founding chairman, leading the groundbreaking Aadhaar initiative that impacted billions of lives. Nilekani's contributions extend well beyond Infosys and Aadhaar. He headed the Government of India's Technology Committee and has been instrumental in shaping India's digital landscape. To sum up, three things which comes to my mind when I think of Nandan is technology, scale, and social good. I think a lot of stuff which Nandan has been doing practically fits into this framework which I thought of when I was thinking how to introduce Nandan. So without further ado, thanks for participating in Ground Zero, Nandan, and accepting my invite to come to the office. Would be great to hear your vision of Digital India.
Thank you. Thanks, Anil. It's really a pleasure to be here. I was convinced to come to this office because he said if we go to the balcony, I'll get a panoramic view of Kaban Park. So that was the bait he used to get me here. So it's great to be here. And so I'll basically talk about India's digital transformation. Of course, you guys do this day in and day out, but I'll give it from the point of view of what is the macro changes that have happened over the last 15 years, which has also enabled the innovation and entrepreneurship that you are following. Now, way back, you guys are too young for this, but way back in 1991, India had a balance of payments crisis. We had to send our gold to the Bank of England and so on. But today we have $600 billion in the kitty, and that's one of the reasons for our strength, whereas many countries in the region are struggling. Or in 2011, we were the most unbanked. Only 20% of people had bank accounts. In 9 years or 8 years, 80% of the people now have bank accounts. What would normally have taken 46 years took only 9 years. And this is something which was a huge leapfrog over the classical ways of doing development. Now, the crucial year was 2016. 2016, many things happened in 2016. And when we were in 2016, we didn't know what it was happening, but it was happening. Because in 2016, we had, on April 4, 2016, the Aadhaar project reached 1 billion people. So 1 billion people we had begun the project in 2009 when I joined the government, but by 2016, it had reached 1 billion people. So in 7 years, 1 billion people had an ID, and so this happened on April 4th, 2016. On April 11th, 2016, we launched UPI. UPI was launched in the Taj, Kolaba. Raghuram Rajan at that time was the governor. Myself and NPCI were all there, and we launched UPI on April 11th, exactly 1 week after Aadhaar reached this thing. And then on September 5th, 2016, Jio launched the new Jio network. And on November 8, 2016, demonetization happened. So fundamentally, this was a whole year when we didn't know, in the middle of the year, we didn't know all this was happening. Now, what happened was, obviously, you know this very well, that the price of data fell dramatically, and data consumption went up dramatically, and data consumption went up from half a gig a month to half a gig a day. 30x increase in consumption. Smartphone prices collapsed. We had 700 million smartphones. And then, of course, the whole demonetization gave a fillip to UPI payments. We launched in May of 2016. By October 2016, we had 100,000 UPI transactions a month. And today, we have 9 billion. So you can see that between the tailwind of demonetization and the tailwind of COVID, it got a huge, huge bump. So this is the fact that we went in 6 years from nothing to the world's largest digital payment system. And it was built on top of all the infrastructure we have. And that also laid the foundation for the vaccination program, because with everybody having an Aadhaar and a common architecture of CoWIN, you could go anywhere and get a vaccination, and you could take the first vaccination in one location, the second one somewhere else, the booster somewhere else. You got a digital certificate signed, keep it on your phone, keep it in the DigiLocker. The dramatic change that happened, all because of the infrastructure that we had. So what is happening? What we believe is happening is that India is making irreversible non-linear change. This is not linear change of 6% growth. This is about suddenly something happening, some kind of new paradigm of productivity which changes the rules of the game. And each change is then acting as an input to the next. So it's all building up together. And we call this as combinatorial innovation at population scale. So each of these technologies is enabled by a building block. And this is what we call as digital public infrastructure. So this is not about individual companies, but creating a population scale infrastructure which is accessible to everyone, low cost, interoperable, etc. And that's why this term is now called DPI, or digital public infrastructure. And it also is important because we needed a different kind of infrastructure than the West. When the internet became popular in the West, in say after the year 2000 and the rise of Google, Amazon, Facebook, and so on, it was driven a lot by advertising revenue. Because in the US, they were spending a few $100 billion on advertising, on print advertising and television advertising. And digital advertising was able to take that money away from television and print and take it to the digital world. Because the average spending in the US per head is $862. You guys are all data and all, no? You guys are big on this data stuff. So whereas in India, it's only $7. So fundamentally, India could not have built a huge economy on advertising. Advertising revenue was totally about $12 billion, of which digital was 2 or 3, most of it going to Facebook, Google, and whoever had the IPL account. So fundamentally, it had to be done on a micro-transaction basis, which is why UPI became so strategic. Because to really have transactions on the internet at scale, you needed a low-cost, high-volume, small value transaction system, which is why UPI became important. So essentially, the Indian internet is not an advertising-led. Of course, now advertising revenue is also going up, but it's not an advertising-led internet. It's a transaction-led internet, which I hope is confirmed with what you guys have found out. But that's at least my view. And these were built as different pieces of the puzzle: identity, payments, and now we have something for data empowerment. I'll come back to that. And all of these are designed to be interoperable, fast, cheap, and so on. So it began with Aadhaar, 12-digit number, 1.3 billion people have it. It's used 80 million times a day. So 80 million transactions or authentications happen in a day, all in real time, anywhere in the country, on the cloud. And this allows you to say who you are. John is John, Ajit is Ajit, Abdul is Abdul, Pat is Pat, whatever. But the important thing was, along with authentication, we built something called KYC. And the Aadhaar KYC used the basic information we had in the database of name, address, date of birth, and sex, and created an electronic KYC where, with the consent of the person, you could do a KYC which could then be used for different purposes. And we worked with all the regulators, Reserve Bank of India for banking, TRAI for mobile phones, and made Aadhaar KYC as a KYC acceptable to those regulators. So what it does is it lowered the cost of customer onboarding, cost and time. So earlier it would take a few hundred rupees and several days to sign up a customer. Now you could sign up a customer in 2 minutes using an Aadhaar KYC. And this foundation was laid in 2012-13, but it really took off later when it was used in 2 ways, again independently. One, it was used by the government to launch the Jan Dhan Yojana program, and that opened 700 million new bank accounts in India, which is why the bank account penetration went up so much. And it was possible because Aadhaar KYC allowed you to rapidly open bank accounts. And the same Aadhaar KYC was used by Jio to enroll 1 million customers a day. Because what Jio was trying to do was, in a matter of 6 months, they had a 6-month window in which they could give free connections. And the idea of that was to give free connections was to test the network. But they converted that into a customer acquisition opportunity and said, we will get to 100 million customers in 6 months. But the only way they could do that was doing an Aadhaar KYC, because then they could just do a KYC and give a SIM card in 2 minutes. And so they built an architecture for doing 1 million KYCs a day, which is how they reached 100 million customers. Today, they have 430 million customers. So they essentially lowered the cost and time of onboarding, used a 6-month free period, and ramped up to 100 million customers. So it became a strategic leverage. So the important point is Aadhaar KYC is applicable for banks, bank accounts, insurance, buying insurance policies, buying annuities, pensions, mobile phones, etc., mutual funds, everything. And what this does is essentially lowers the cost of customer acquisition and reduces the barrier of entry to newcomers to take on incumbents. So in banking, obviously in mobile it was Jio, which was the newcomer which took on incumbents that were there. But even in banks, Paytm Bank came and so many banks came. They all use Aadhaar KYC to rapidly get new customers. So it's very important. And then, of course, UPI took off dramatically. The UPI architecture is very important. The UPI architecture was to create a neutral payment road or rail built by NPCI, which is a non-profit company regulated by the RBI and owned by the banks. And the bank account is in the bank account, so you don't touch the banking system. But in front of this, you can have multiple apps on which you can make your payments. And that led to the rise of Phone Pay and Google Pay, and Paytm, of course, also came around. So today we have 9 billion transactions a month. We have about 300 million people who use UPI. And we have 50 million merchants who accept QR codes for payments, 50 million. Now, to give you a sense, context of the scale, in the first 75 years of Indian independence, we only had 6 million point-of-sale machines which accepted cards. And in 3 years, you had 50 million merchants who accepted QR code payments. The scale was completely different. And as you know, today you can't pay in cash anymore. They look at you as if you're weird or a foreigner. Because how do you pay this stuff, right? So that's 9 billion transactions a month. And it's everywhere today, as we just talked about it. Even guys on the street sell you stuff and all that. The other important thing was also on the logistics side, the development of FASTag, which again came out of a report I did in 2010 to build a passive RFID tag-based system to pay toll. And today that does about 2.4 billion transactions a year across all the highways. And all collection of money on highways now is done electronically. They just debit your bank account or wallet. And that has made a big difference on the logistics. So all these are all macroeconomic benefits. And then, of course, DigiLocker, which I'm sure, I hope all of you use it. Is there anybody here who doesn't have DigiLocker? Oh, you don't want to tell us that you don't have it. Huh? Any renegades who don't have DigiLocker? Somebody? Okay. So anyway, so you have DigiLocker, you can keep your Aadhaar card, driver's license, passport, COVID certificate, whatever you want, show it at the airport and so on. So currently about 150 million people use DigiLocker, 5.6 billion documents in it, and there are multiple document issuers, your high school certificate, degree certificate, etc. So the whole idea is to create an interoperable, secure documentation infrastructure. And then the latest thing is the account aggregator system, which allows people to get access to their own data. In the financial system, the data comes from what are called as financial information providers, banks, mutual funds, etc. And I can ask my account aggregator to get my data from here and send it to an app that gives me credit or something. And this is something which is applying to the whole financial system. The reason why this is important is the only architecture in the world where you are in control of your data. This is otherwise when data accumulates, it's accumulated in, by the companies or by governments. Here, you are in charge of your own data. You can access it in real time from any source through an open API. It is sent encrypted to these guys, and you can give them consent as to what they can do with your data. And this essentially democratizes many things. And the one important thing it will democratize right now is credit. So credit democratization means that millions of individuals and millions of businesses will be able to get access to credit using the account aggregator. We are doing about 5-6 million transactions now, but I think in the next 3 to 4 years, this is going to be big and have an impact on all kinds of markets and create all kinds of new businesses that will use this stuff. So fundamentally, the way to think about it is the approach we have of DPI in the, it's not government applications. It's not about just government providing services. Nor is it only markets providing services so that, big players emerge. It's about a balance between creating interoperable standards, creating protocols, creating platforms, and then allowing innovation to happen. So it's the best balance between public and private. And that's actually what the internet was. If you go back and rewind, The internet was actually built by the government, US government. And between 1980 to 1995 or whatever, it was entirely a government thing. You used all kinds of things on the internet. But it's only in 1991 when the browser, when the World Wide Web was invented at CERN in Switzerland, and they put out the specs for HTTP and HTML, that suddenly you could point and click and go to another website. And then to make that much more user-friendly, the Mosaic was designed, again as a public product in 1994. You could click and go anywhere on your thing. And Mosaic led to Netscape, which then led to the private internet. So the private internet only began in 1995. So there again, you had government enabling internet, you had open protocols, HTTP, HTML, SMTP, and so on. And then you had applications, Google, Facebook, and all that. Similarly, GPS was a public infrastructure built by the US government. GPS had the APIs. The APIs were available here. And then you could build Google Maps and Uber and travel because of the fact that below the hood, you had infrastructure like GPS. So this is not a new idea. But what we have done in India is taken it forward. We applied it to identity, we applied it to payments, we applied it to data, and so on. So it's taking the internet further into this approach, which encourages competition and innovation. And today, billions of dollars of market capitalization has been created by this infrastructure, right? Jio benefited from it. PhonePe, Google Pay, there's so many startups that are all using this. So this is a very important approach where you combine the best on the public and the private. Now, it's not just one is DP has helped market innovation, but it also helps the government, which is the original reason for doing this. So when we did Aadhaar, then we used Aadhaar KYC to open bank accounts. Then we built a direct cash transfer pipe where I can send money to anybody's Aadhaar number, and then somewhere in the system it decodes to the bank account and credits the money. So this is the direct benefit transfer system we have. We have the world's largest direct benefit transfer system, and today, cumulatively since beginning, $310 billion has been transferred electronically in real time into people's bank accounts. So it's a huge thing, and more than 1 billion transactions. It also has meant that all this digitization is also leading to formalization. So formalization means more people are becoming part of the formal economy because they have identity, bank accounts, they pay for GST and all that. And therefore, India has seen a consistent increase in taxes, which are the rate of tax growth increase is higher than the rate of economic growth. In other words, because of formalization, because of technology, because of compliance improving, more people are paying taxes, and the revenue of the government is going faster than the rate of GDP growth, which is very important if you want more money to spend on infrastructure or to give benefits or whatever you want. So it's very important that we are creating the infrastructure for formalization. All this is creating the infrastructure for formalization. So on the revenue side, you're making more money, government is making more money, and on the expenditure side, the government is becoming more efficient because the money goes straight to the beneficiary. So on both sides, you're improving the productivity of the economy. This is also the reason why Indian stock markets have been much more stable. Historically, since liberalization, India has depended on foreign institutional investors who would come in, and then something happened, some guy sitting in Washington would increase the interest rate and all the money would go out, and then Indian markets would catch a cold. But in the last few years, the money coming in from domestic investors has been dramatic, and that has actually helped the markets. So when the foreign investors go away, the Indian investors hold it up. And then when the foreign investors come back, the combination of this drives markets to new highs, which is what is happening today. So it's very important to realize what is happening. And the reason for this is, the biggest part of this is SIPs, systemic investment plans. And SIPs are essentially instructions you give to your bank or to your employer to deduct X rupees a month or week or whatever and give it to some mutual fund. And those SIP mandates are growing dramatically. And all the SIP mandates use UPI and autopay. So you deduct from a UPI bank account, and then you give an autopay instruction that every month deduct 500 rupees from a bank account and put it into some HDFC mutual fund or whatever. And that is now giving us about 12,000 crores a month of money is flowing from private retail investors into the capital markets. And that is the foundational strength of our capital markets, that there's a massive flow of money, almost $1.5 billion a month, into people's bank accounts. That is enabled by technology. Today, in an IPO, 50% of the applications use UPI ASBA, which means ASBA, the way ASBA works is that you apply for IPO, you reserve money for your IPO in your bank account, and when you actually get the allotment, only then you debit your account. So 50% of the applications use ASBA. So this is all infrastructure which is possible on your phone because of the things we have. So this is the only country in the world where we have population scale APIs and networks to transform society. This is the PhonePe data of payments from their Pulse system. It shows that this is all over the place. It's not just a urban phenomenon. It's all over. The usage of these technologies is all over. Now, all this was possible because India also has deep talent density. Talent density has come from the growth of the IT industry. The IT industry, firms like Infosys and all that, today that industry is a $227 billion industry, employing close to 5 million people. And that has provided both the financial stability, because the $600 billion of reserves of India comes from the fact that these guys send back hundreds of billions of dollars of money. And it has come from the talent has come from this. And this is just GitHub data. GitHub data already, India is number 3 on GitHub in terms of developers. And since the Chinese are moving out of GitHub, it will be number 2 very shortly. Because they're having their own GitHub, because they don't trust this American GitHub. One day they'll be blocked or something like that. So it just shows that the whole developer ecosystem and macro stability is helping create the startup revolution. But also the startup ecosystem itself has grown dramatically. And this is all stuff that you guys are familiar with. I'm sorry I didn't choose to take one of your data points. But in 2016, the same year, what happened in 2016? Aadhaar 1 billion, UPI launched, demonetization, Jio launched, 1,000 startups. Now, 90,000 startups. You can see that how the game changed in 7 years. Another way to look at it is how data has become so important. You can look at the IPL broadcasting rights. The first IPL auction was for this 3 years, 2010. It was only for television. There was no concept of digital. And then by 2018, which is 2 years after that seminal year, little bit of digital. By 2023, the digital rights, which were bought by Jio, were more than the television rights, which were bought by Star. All happened in the flash of an eye. And in 2016, guys are sitting, huddling in some shop, watching cricket. 2020, they were watching on their own phones, right? This is the change. And then, of course, Shark Tank and all that stuff. In 2012, the IIT entrance exam topper said, I want to be a scientist. In 2021, the topper said, I want to be Elon Musk. In other words, the mental mind shift of young graduates from wanting to be scientists and going abroad to being entrepreneurs happened in 6-7 years. And also the whole alumni networks of startups, right? It's like nuclear fission, it keeps exploding, right? So there are 113 startups founded by Myntra alumni. And there are 318 startups started by Flipkart alumni. So each begets more, right? So a guy who's part of a founding team or even works somewhere becomes a startup. So that's why we went from 1,000 startups to 19,000 startups, even as India's digital infrastructure took off in this scale, and huge amount of money raised by these guys. And then what happened was that this led to digital natives. So Ather and Ola started doing EVs. But then the incumbents had to catch up, and now you have Hero and Bajaj and TVS making EVs because these new guys have taken them on. Or Nykaa starts fashion and now Tata wants to sell in Neo. Or all these Neo banks started, and hence Yono, SBI, Cherry, Kotak. So what this has done is increase the competition on incumbents, where incumbents had to respond to digital natives and had to respond with their own challenges. So you're increasing the economic intensity of competition in the country. So what is happening at a mega level over the next 10, 15 years? India is going from an offline, cash, informal, low productivity economy to an online, cashless, formal, high productivity economy, right? It's going from offline to online. Billion people will use this on their phones. UPI and other things are going to go to cashless. Formalization will be driven by digitization, so it's going to have many more people, better taxes, and productivity will go up. Instead of taking 1 week to open a bank account, you open a bank account in 2 minutes. When you open a billion bank accounts, that's billions of minutes saved. When the truck going on the highway, instead of taking 10 minutes to pay toll, takes 2 seconds, that's millions of minutes saved. So across the board, there are many, many examples of how digitization at scale is going to reduce transaction cost, improve productivity, improve trust, reduce discovery time, improve supply chains. So this is all happening. You guys are documenting this. But this is a slow process, but we're on this trajectory of going from here to here. And what are the big 3 things that we believe will happen? Clearly, credit. I talked about credit, e-commerce, and logistics. So on credit, essentially, India is not a high. India actually credit to GDP ratio is not much. It's 60% of GDP, whereas China is some 300% or something. So there's a lot of credit. So India is an underserved market for credit. Moreover, the credit in India goes only to the big guys. So only big guys can go to banks and get money because they can spend time doing the appraisal and showing their assets. Small guys don't get money. But essentially, this technology that we are going to have will enable smaller and smaller value loans, which is what is already happening. Loans values are coming down, but we think this is going to dramatically change thanks to digitization, account aggregator, and so on. So the huge change which is happening. And now we have the concept of information collateral, which replaces physical collateral, or what we call as digital capital. So we thought of capital as land and labor and money and so on, but your digital footprint, your transaction history itself is a form of capital. And essentially, our infrastructure will unlock that capital at scale for everyone to get access. So, using AI and so on. And suddenly, everybody has monetizable digital capital, which they can then use to get access to credit. And then whole supply chains will get simplified. GST, single tax across the country. India is the only country in the world where, not only, but one of the few where both indirect and direct tax is completely automated. So everyone files income tax returns online, everyone pays GST online. And the way the GST is designed is that when you pay GST, the money is divided at the point of payment. So suppose you have to pay 1,000 rupees GST, 500 rupees goes to Government of India, 500 rupees goes to Karnataka state. When you pay at the bank, at that point only it divides and goes into 2 accounts. So neither the central government touches the state's money, nor does the state government touch the central government money, right? Then we have e-way bills. So e-way bills, for example, when a truck passes through a point, you have an e-way bill and I can electronically read my e-way bill. I don't have to open the truck. I can do only random checking. Reduces times at interstate borders. FASTag we talked about. Then the huge host of physical infrastructure, better roads, better highways, better warehouses, better ports, etc., combined with startups doing all kinds of very amazing things. And we're going to create a whole efficiency in the logistics side. And then, of course, ONDC will change the whole commerce space, because you are now going to open up commerce in multiple ways. One is you're going to increase the inclusion in commerce. Every small retailer can now be in commerce because he just has to hook up with ONDC. So they're going to have massive increase in that. Hyperlocal commerce will take off because it's very easy for me to order from my neighborhood store because he's listed on ONDC and I can order it. Complex commerce will take off, which means if I have to have a commerce which involves 3-4 parties, you buy the furniture unbundled from IKEA, somebody does the assembly, somebody else, you can actually build a scripting flow on ONDC to create this thing. And and it's going to change mobility, it's going to change e-commerce, it's going to change food, everything is going to change because you'll now have specialist supplier aggregators, you'll have specialist distribution companies, and therefore, once you unbundle, then the consumer experience can come from anywhere. So I can order on a hyperlocal app like a PIN code from, PhonePe. The shop may be listed by some magic PIN, and the delivery is done by Dunzo. You can do that in one seamless transaction. So fundamentally, the unbundling is going to make huge impact on commerce and lead to massive inclusion. So cheaper credit, wider discovery, and better logics will commoditize our supply chain. Now, this is something like what we did on the digital side. On the digital side, rise of digital advertising, Stripe for payments, web services, we could actually create full stack to create digital companies, which is what we are. Why we see so many companies, we can just put that together. The same thing will happen on the physical side. Credit, ONDC, UPI, logistics will all come together and essentially make the whole discovery and fulfillment across the national market much, much simpler. And then, of course, we have initiatives like AI for Indian languages. We have an initiative called Bhashini, government initiative. We have a group at IIT Madras, AI for Bharat, which has built the biggest language model for all Indian languages. And it's all open source. Anybody can use it. So tomorrow, you can use any data from here. Your app can talk in any language, etc., translate into any language. Suddenly, language becomes accessible. So, when we had laptops, we had to have keyboards, so people had to know how to read and write in English and all that. Then you had phones where you could use touch, but you still had to be literate. Now with Bhashini and AI, you use voice, commands and receive. And behind the scenes, there can be, chat GPT, whatever you want. And fundamentally, imagine every Indian in their own language, in a voice command, can operate a phone and get all the knowledge on the planet. What else do you want? So way to think about it is that what you're seeing is each of these things are building blocks. IT services led identities, India's chief smartphone. So all these things are coming together, and this is why you're going to get that economic activity that you all talking about, going to that $10 trillion economy. So fundamentally, it's a different model of growth. It's not happened before, so people are not able to put their heads around it. But fundamentally, it's a different model of inclusive growth, which is much more democratic, which opportunity at population scale, and which we think will lead to a very better future. Thank you.